had a look at, and I pulled price back to a random time in the charts, okay, and we're just on EG just out of because that's what I was looking at today, anyways. So what I'm going to be going over is the market maker model and how I normally trade it, but I just want to look at something without going down to a lower time frame and try and explain what I've learned off of the video, but more for myself to actually go back and backtest this more. So obviously here we can see we have this daily fair value gap. Okay, so obviously we always trade from internal to external range. That's how I trade, and that's how I always trade. We're just going from a inefficiency to liquidity. Okay, so it's simple. So we have this daily fair value gap. If I make that visible on all below. So daily, if we go from daily, we go down to the 1 hour. Let's pull this fair value gap over here so we can actually see it nice and clear. Don't mess the charts up. Let's leave that there. Right, so we made this daily fair value gap. Obviously, we need to go on to Wednesday. Where would that be? Over here. Wednesday open, which is, yeah, here. So push that forward a bit. Okay, so we're on to Wednesday now, okay? So this is the starting candle on Wednesday. So we left the daily fair value gap from the Monday till, and obviously Tuesday created the gap, Wednesday, then, sorry, am I right in that? I can't go back. I'm going to have to pull it because you're going to see the trade play out. So let's pull that back to there. Go up to the daily. Yeah, so we got, right, so it's Friday. Monday creates the move. Tuesday then leaves behind the fair value gap, okay, which is then what we're obviously looking to trade going into the Wednesday, okay? So obviously you can see that we was bullish on the PA anyways. Are we up to Wednesday? No, we're still on Tuesday. We need to flick through this quickly. Keep flicking through all the way until we get to that Wednesday. Okay, so we're on Wednesday, right? So as you can see, obviously Wednesday's come down, and we're going to tag into this daily fair value gap. Okay, now obviously we can see this is extremely bearish, and look at the time. We're at 4 p.m. New York time, so there's no trading for me at that point. Anyways, I only trade between 9 and 12 in New York, and then I trade London session also. So we can skip through to the next day, which is then Thursday. Sorry, yeah, Thursday. We're going into, obviously, you have Asia session. Okay, and then here we're in Thursday. Okay, now we still have this daily level. Okay, we have this low here to be taken out before any trade can occur. So we could look for this Asia low to be taken first, which is obviously what's going to happen. And then we're going to tag into the daily fair value gap. Yes, it's tagged in once here, but there's been no structure shift or anything to take an entry to go higher. Plus, being late in the session, there's no reason to enter it. So you see London prints lower straight away, okay? So what do? We take this low. This is a liquidity sweep, okay? And then I'm going to explain why and what I'm going to do differently with a little bit of backtesting to see, okay? And I don't know if this is going to suit me going forward or if it's not going to suit me. So it's just basically an explanation video. So we sweep this low, okay, which is Wednesday's low, and we're inside the daily fair value gap. This happens in the first hour of London. We've also got Asia levels taken out as well. So with a bullish bias, which is what we have, we can now look to see, can we get an entry? Now, this is where it's changing what I want to try and backtest to see. We've taken this low and we're going to close back above the low now, okay? We've also taken both sides of this candle. So this is what they call an engulfing bar pattern candle or something like that. This is based on what JCap teaches as well. So we've taken both sides of this candle. We've swept liquidity. We've closed back above the swing point, okay? So what I'm going to go ahead and backtest from today onwards is entering based on this here. So we're on a 1 hour chart, and I just want to enter with my stops below that current 1 hour engulfing candle, and then target. Obviously, we have daily internal, so I'm going to target the daily external. Yes, you have this level here, okay, which we can mark out. You also have this level up here, okay, which is your external range. Now you're looking at a 1.78 trade, okay, which means on the 1 hour as well, we're probably going to be in the trade for a while. But what you can do, obviously, if you don't want to hold trades for a long time, which again, this is where it may suit me or may not, we can go for 1 to 2R here. Okay, so we can just label that 2R. And then obviously we can pull that back up to the external range and we can mark that our external range is there. Okay, so what you can do along the way is probably take partials, or depending on how long the trade takes to move, you can do whatever you like. But the main concept here is we've tagged into the daily fair value gap. Okay, so we're going internal. The next move is to go external. We have this Asia high here, which is technically a external range on the lower time frame. But as we're basing this off the higher time frame daily chart, we're going to look to go for the higher time frame daily external range. Okay, so it's quite relatively simple. It's relatively the same as what I do now. All I'm not doing is going down to, let's say, a 15-minute chart, waiting for a market structure shift and entering off that. What I'm going to try and backtest and see is that pointless? Do we need to do it? Or do you get similar entry just by entering on the new hour candle when you see this pattern? So you see an engulfing candle, takes both sides. I believe that is what they called it. Yeah, an engulfing bar pattern. So it takes both sides of the previous candle and it's swept liquidity as well. So yeah, I'm going to just see how this plays out. Obviously, in hindsight, I know how this plays out because I've checked this. This is how I found the trade. So as you see, in the first 2 hours, we take the 2R level, okay? So that's 2R done. And now what I want to check is obviously you've gone from a 1 hour and you've got a 5-minute chart. This is how I would normally trade is I'll wait for a market structure shift and then I'll enter. And as you see, you don't actually get it, okay? Because you have this, is this higher than that one? No, that's the same, so that's not. So you have a market structure shift here off this high, okay? Price doesn't leave, it leaves this FVG behind, but you don't go to it. It leaves this inversion here, which price doesn't go back into after we have the market structure shift. So you would have actually missed the move. So what you could have done is obviously taken the move from here, but we'd just taken Asia. So I would miss this move because of all these little things on the lower time frames. Whereas on the 1 hour, I'm not looking at all of that noise. I'm literally just taking it based on my daily 1 hour, which is really quite simple and relatively easier than going down and waiting for the market structure shift, displacement, entry, and all that noise that comes with that. So we've obviously got that, and then we can play price out. You see, New York session absolutely rips to the upside, and then in the little bit of overnight, we get the whole trade runs to TP. Now, the 7R is ridiculous. I've never traded like that. But I'm starting to think it's something that I'm going to do going forward because I want to spend less time on the charts. And I find my higher time frame bias is always correct. It's my lower time frame that being on the charts a lot and rushing to enter, and I end up snagging myself and end up losing. And again, like I said, you could just close the trade at 2R. I'm going to go over and backtest quite a lot of trades just like this and see how many I can get and how many win. Also, I'm going to make a note of how many times it hits 2R and go from there. But yeah, it's just something I'm going to have a look at. This engulfing bar pattern entry thing that he goes back to is something I'm going to look into as well. And obviously, closing above the swing point is also one of the checklist items. But I'm going to make a little checklist. I'm going to go back and backtest it and see how many times I can pull this out, see how many times it hits 2R, how many times it hits the full external range, and then see how much money I make. First of all, I'm going to just pick one pair and do probably a month's worth and see how that plays out. And if it's good, then obviously I'll go back and do more. But it means I'll be holding trades a lot longer. As you can see, obviously, if you're entering here, technically you're in that trade for 16 hours, which is, more of a swing trade. But that suits me fine. As long as I'm in and out within the same week, I don't really mind. It's just going to take a bit of getting used to. But yeah, I'm going to backtest this a little bit now.